All right, hey guys, this is Steven from Even Steven Money, and I am here with Bob from, can you pronounce that for me? Can you tell me the website?
Tawcan.com, Tawcan.
Tawcan. I should have asked you earlier. I know that was going to be a tough one for me. But yeah, we're here today. We're talking about the early retirement blueprint, and we're talking about the 5 keys to really your investment and your early retirement blueprint. And today I have, the special guest Bob here because we wanted to talk a little bit about his investment catalyst and his investment of choice. And then really that's going to bridge into the secondary passive income stream that I recommend as you move on, kind of diversifying into that. So Bob, I wanted to ask you a question right away about dividend investing. So Bob, with your dividends as your main investment catalyst, I guess, why did you choose dividend investing? How did that get started?
Right. So I really started investing when I got out of college, university, back around 2006. And back then I didn't really know anything about index ETF. It wasn't as popular as today. So I was just looking at an investment vehicle I could use instead of just putting my money in the bank and collect interest, right? Because that's back then it was about probably like 3%, 3 or 4%.
Okay.
So I thought stocks is naturally the best investment vehicle for a freshly out of university person. So I was looking around and settled on an insurance company because we use it at home. It's our kind of like our house insurance. And so I invested in it, and the stock happened to pay dividend about 4%, 3 or 4%, which is pretty decent, right? It's about the same as leaving it in the bank, and there's price appreciation. So yeah, I purchased it, and then, as you know, about 2 years later, the financial crisis hit, and the stock went down, and all that stuff, good stuff. But I took a bit of paper loss with the stock back then. Mm-hmm. But I was thinking about, well, should I sell it and take the loss? But at the same time, I was like, well, if I sell it and take the loss, and I put it in the bank, I would be getting about 1.5, 2% because the interest rate went down by then. Mm-hmm. So I figured, well, I'll just leave it, and it's only paper loss. I'll leave it and just collect dividend, right? So that's how I started, and I still have the stock today, and it has since more than doubled, and I collected quite a bit of dividends. So that's how I started in terms of investing in dividend stock. It's really just by accident, and I didn't really get into it until maybe 2010. I started reading more personal finance books and investing books, and really got into really interested in dividend stocks. So the idea is you purchase dividend stocks from companies that you use on an everyday basis. So
okay.
We use Procter and Gamble products, so buy that. We use cell phones, so we buy telecommunication companies. We use Apple Macs at home, so we have Apple stocks. So that's the idea, right? So and banks, for example, right? Like, banks are making so much money. Well, the Canadian banks are a little bit different than the U.S. banks, so they didn't suffer as much during the financial crisis, and they're pretty stable. They've been paying dividends since the late 1800s, and they never stopped paying. So that's pretty good history. And I figure, banks, if they could make money really easily, if they want to make money, they just increase their monthly fee, right? Or it's just easy for them to make money, and not that many people switch from banks to banks, right? It's not like your telecom provider where you could, if you're on AT&T today, you could switch to Verizon after your contract is done. For people with banks, people don't usually switch that often. So anyways, long story short, that's how I started, and in the last 2 or 3 years, I started looking into index ETFs as well to get more diversification. because
Okay.
there's always a risk just holding individual stocks, right? Because you don't have that diversification. So we hold index ETFs, two ETFs. One is the Canadian one is the international one, to get more exposure diversification.
Okay, that makes a lot of sense. So you got into dividend investing, then really a little bit of an accident, but the accident was a good accident because you just wanted to earn more on your money. You decided to go into something that was something that you had some knowledge at, or at least something that you used with the insurance. I know, well, I believe it was Peter Lynch made that really popular with, invest in what you know or invest in what you use, because you'll have an advantage over, something that you don't know about. There's so many things that we don't know about, of course, but if you can keep that, that limited reach, you'll have more knowledge than other people. Now, did you have a background in investing in terms of like the research, or would you say just kind of like the common investor who has learned a little bit over time to really get into dividend investing?
Yeah, so I would say I'm more the common investor, and gaining knowledge with reading different books. So the classic intelligent investor and
Sure.
all those ones, right? And I've also taken courses on investing, and
Okay.
that was more to do with like technical analysis, like channel breaking, trend analysis, graphs, and all that stuff, which is technical, and I found it does work to a certain point, but when your portfolio is small, it's hard to execute that because you're trading such small quantity, so you don't gain as much compared to, say, you're trading with $300,000 worth of portfolio, right? So
Right.
so when I learned, I was at the beginning of my investing career. It was good because I learned how to analyze stocks, not just from a technical point of view, but also like how to read their financial statements and how to look at trends and all that. So slowly gain knowledge through that. But yeah, I think nowadays and nowadays I just look at mostly just data and their growth estimates and all that stuff. But the beauty of dividend investing is that if you buy companies that you use regularly, you don't need to go into that kind of depth. For example, if you're investing in, say, Beyond Meat that just came out, IPO, you probably need to do a lot more research compared to if you were to buy Bank of America. Just because if you bank with Bank of America, you kind of know what kind of like their finances and what they do, right? With Beyond Meat, it's still a growth stock, and there's a lot of unknown, right? So from a level of research, is kind of different.
Right. Yeah, I could see that. I have, again, kind of that built-in knowledge where, you know a little bit more about that company, whereas, Beyond Meat, you got a general idea, but it's not really, it's not in your wheelhouse. But so now this is kind of goes into the dividend investing in the early retirement on your strategy. Now, is your plan to then in early retirement to build up your dividend portfolio large enough that the dividends that you receive would cover your monthly expenses, or yearly, since they pay out at different rates? Or was there going to be some sort of combination of dividends? You mentioned index fund investing, but really, would you be selling some of your portfolio as well to reach that 4% of your expenses?
Yeah, good question. So we're a little bit different than maybe your typical FIRE bloggers. So technically, we could be financially independent if we really want to today.
Okay.
I think our net worth is sufficient enough to cover our expenses for the most part. And if we want, if we were to get out of Vancouver, go to a lower cost living city, we're FI by now. But we wanted more buffer and just a little bit more flexibilities. So yeah, like what you asked, the idea is to have dividend income covering our expenses. Uh, for the most part, I mean, we do have some other passive income streams or semi-passive, but for the most part, we think our goal is to have dividend income covering our expenses. And in the initial, like in the early days, that's the goal. But we certainly we're also welcome to in terms of selling some capitals, but maybe not for the first 5-10 years, just to build some margin safety. Yeah.
Getting these two out. Mommy tried. Can you get it?
There you go. Yeah.
Hey, maybe we'll include that. You're always, this is what you'll be doing in early retirement. You'll be playing a little more with the kids. But so my question then is, so what is you mentioned dividend investing, you mentioned index fund investing, you mentioned some semi-passive income streams. What is your strategy moving forward with that? What are you putting your money into? What is the plan to, like you said, a little bit of diversification as you move forward?
The plan moving forward is really just continue doing what we've been doing, dividend investing, index investing. We were looking at rental properties, but being in Vancouver, the housing price is pretty crazy. So I don't think for the amount of money we have to throw in and mortgage and all that, it doesn't make a lot of sense.
You have to take these out.
Okay. Please don't.
Yeah, see here.
There you go.
Thank you.
Yeah, so really doing what we've been doing, but we are also open to other opportunities if anything pops up. If rental properties make sense, maybe not in Vancouver, maybe somewhere else. We'll see. The other thing we're a little bit wary of with rental properties, not only the cost of the properties, but the laws here in British Columbia they're more protective of renters. So we have quite a few friends who had bad experience with renters, and they couldn't evict them that easily. So they took a pretty significant loss, right? So in our minds, like, well, why do we want to deal with that when we could invest in REITs, for example, which is essentially like rental property in a different way, right? But yeah, I mean, we'll see. But for now, it's just dividend and index ETFs.
Yeah, and I think you mentioned the real estate or diversifying your portfolio. It doesn't have to be just one avenue, right? I think that's what's great about investing in general. You do have that catalyst, and then you do start putting it into secondary passive income streams. And it could be rental real estate, but REITs are available, and then you can start going into the number of different REITs that are available. Not just single family housing. There's commercial. There's literally so many things out there, and it's just really establishing what you're comfortable with, the risk that you're willing to take, and the return that you would like, and then just applying that to your portfolio. So exactly. I think that makes a lot of sense.
Yeah, even like peer-to-peer loan, it's not as easy in Canada compared to the States, but I mean that's not an option. So I think it's about building your base, right? Like you said, the primary revenue, and then you could diversify into your second revenue income stream and all that stuff, right? So we're still looking into that, but I think we're pretty comfortable with dividend or just stocks in general.
Yeah, I mean, it seems like it's worked. It sounds like you have a good strategy, so that's important. But yeah, I think that wraps it up really well. Just kind of talking about having that catalyst as your base, then moving on to kind of deciding what your secondary passive income streams are. Bob, I appreciate all the information, all the knowledge that you've shared with us today. Can you tell everyone where they can check you out so we can, they can dive right into some of that dividend investing?
Sure, you could check out my blog on Tawcan.com, so that's Tawcan.com. Or if you're on Twitter, find me on @Tawcan, Tawcan. Twitter I'm probably the most active on there. I'm also on other social medias, but yeah, find me on Twitter is probably the best.
All right, perfect. Well, thanks again, Bob, and I will hope to see you at FinCon. Hopefully we'll both be there and we can share dividend stories. Hopefully I'll have some more dividends.
All right, sounds good.